the dip that you have all been waiting for, but is it over? Has the dip already finished, and is it going to be up only from here? This is what we're going to have a look at today. We have a whole lot to look at, but judging by the crypto bubbles chart, there are a couple of altcoins that are already rebounding in a really strong fashion. So have you missed your chance to get in is the question that I'm sure many of you, including myself, are wondering. Without further ado, let's get straight into the show. And I thought start off again with the high time frame. As you can see, clear rejection from the zone. Very, very relatable to what happened in the stock market. That is why I said yesterday I was hedging my bets and taking both the short and the long. And so far, this candle is looking like a rejective candle. Let's see how the rest of the week finishes. I don't think that the week will end in the middle of no man's land over here. I think that either we start to push back up and the candle turns green, or we have continuation to the downside. But as it stands, you can see, and I want to quickly put in an actual line. I want to zoom in and show you what this looks like. Let's grab the magnet. There you go. If you do take a look at that, and I go in really, really close to that, we are still yet to make a convincing higher high on a closing basis on the high time frames for Bitcoin. It's marginally closed the previous week below. And yes, it's splitting hairs, but that's what you need to do in trading. It is still a lower high until proven otherwise, which means that you should be looking for further downside. But I do think that demand will kick in. And will we get that downside? Well, I'll cover that on the low time frame charts. I have very specific ranges, which I want to show you, as well as to update you on the trades that we took yesterday, both the long and the short, and how you can manage that position going forward. So DXY over here, this was the main area of interest. Still not sure if it's going to make it all the way into that zone. This could be pretty much as far down as it got, and now looking for a reversal on the DXY, the dollar index. Otherwise, it's got 0.22% further downside into that zone, and that is where I expect a major reaction. But that could have potentially been front run. So we need to just take it as it comes. You can see over here, massive impulsive move to the upside, big candle that bounced off of the 101.52 level and now reclaimed the white line over here, which is strong horizontal at 102.1. So I don't know if you can see that line over there. I can make it bigger. Let's just make it bigger for you. There you go. So that level over there, as long as the DXY is above here, I would anticipate that it's going to start to grind up ever so slowly. Okay, S&P 500, very, very big one. Big rejection off of that zone. This has been a very, very easy and obvious chart to trade for a long time over here. Lower high, lower high, lower high. Big rejection. This one definitely got some people trapped. And then I said probable rejection zone over there. Failed to hold above the 200-day moving average, and now we're coming down. Now the question is, how far do we come down? Is it going to be a pullback that provides a dip buying opportunity, and then is it going to fall back into a range? If so, these are the levels that I am looking at for the S&P 500. So you can see over here, of course, the orange lines. You got the range high. That I see as the range high. This is the range low. And this is more or less the mid-range. The mid-range also lines up with the 0.382 fib level. And if the market is going to reverse from here, this is where you want to see a bid get caught into the mid-range and into that fib level, and then probably come back into the range high with another opportunity to try and break out. So it looks like there's a possibility that the S&P 500 is starting to slow down, and that would mean it's coming into a range. It could even sweep those lows over there and then come back up. But I'm not necessarily looking for major breakdowns yet. I do think that for both crypto and the stock market, it is probably overdue for some sort of a relief rally that at least traps more longs into play before reaching the ultimate lows, which, if those even come, will maybe only happen sometime in Q2, which is why, of course, I want to participate in the upside in the relief rally if there is a trade to take. I remember back in 2018, I think the relief rally that took place there resulted in 5-6x returns. So 5 to 6 times your money just holding spot on particular altcoins. And if I see the trigger for that, I definitely want to participate on that and at least get like a 2.5 or 3x return on big spot positions. That's a blessing from the market. If not, we'll short the market the rest of the way down. So that's kind of what I'm watching. It looks like the S&P 500 futures is already continuing to the downside. Level to watch is 3,802, 3802. That's the zone to watch for a possible bounce within that area. Very, very easy trade to take. If you are looking, I may as well just show you the trade now. For those of you who do trade on Prime XBT, that is one place that you can take the trade, and it would look something like this, targeting back into that zone with your stop just below. That's giving you a 1 to almost 5, 1 to 4.5 risk to reward trade over there. So that's an opportunity for you. Okay, moving on. Yes, quickly to touch on the Rolex competition over here. Don't forget, guys, that there is only a couple of days left. We will be, there you go. So you got the blue and gold Rolex over here, and then we have the black one as well. We only have a couple of days left in the month of February is when we plan on giving these away. Beautiful, beautiful watches over there. Great timepieces. And all you need to do is click on the link below. There's a ByBit link. There's also a Bitget link. The real value in using these links is not necessarily in standing a chance to win a Rolex, but the real value is actually getting into the Discord. The Discord community has so much alpha, guys. Join there. Use any one of those links. I would use the ByBit or Bitget simply because that gets you access into the competition and into the Discord. So it's a double win. That's where not just myself, Sheldon, 𝗕𝗬𝗕𝗬𝗕𝗫, and myself, as well as a lot of community members, are dropping daily trades, and there is huge alpha in there. If you are looking to make trades and you don't have the time necessarily to sit and chart all day, that's the place to be. Okay, moving on. So you have your reformed trader. He says that the SPY bulls will keep drawing their inverse head and shoulders, and you can see over here all the way at the top, right? They try to draw inverse head and shoulders over here, and then it just nukes through that level again. Inverse head and shoulders, nukes through that level. Try it again, inverse head and shoulders, and that's pulled through, breakdown into that level. So it seems to be a repeat. Well, this would be the right shoulder now. So let's see if that is going to break down again. That is, of course, the SPY, which is pretty much the same thing as what I just showed you on the ES over here. So expecting further downside for that particular trade. Now, this area over here, are we going to get a sweep down into these lows, into the $19,000 region? I'm going to show you on the low time frames, but if this were to be the case, then the falling wedge may be confirmed, and that gives you the relief rally target all the way up to 29 to 32,000. But if the market is going to truly go parabolic, then it means these dips are going to happen extremely quick, and you're going to have very little time to get into the market, which is why I did set that grid strategy order. I recommend you do the same if you, or even set limit orders, multiple ones at the particular levels that you find of interest. My recommendation is the bulk should be set between $19,000 and $19,500 for Bitcoin. That's kind of the zone where I think you would see a very, very quick reaction into. Now, the wolf of all streets over here, a friend of our channel, Scott Malker, he does say over here that crypto hit $1 trillion market cap earlier today, and then it got rejected straight from that zone. And you'll remember yesterday I showed you from Nakamoto list his whole thing with regards to the stablecoin supply ratio and how that should continue to trend up if the bull run is truly backed by real demand. And here he's come out today with his downward parallel channel using total 3, calling it down to 120 billion. So I thought, let's take a look over here at total 3. Now, I see it in two particular ways. One is that, yes, that could be a rejection more or less from this zone over here. So if you look over there, 1, and then you look at the next one, 2, rejection, and then 3, the third rejection, more or less from that trend line. That is a possibility. This is a chart that I'd previously drawn on one of the daily candle newsletter editions. And I said once we broke down this main trend line being the one, should probably make these bigger for you guys. Let me just do that very, very quickly so you can see those trend lines. There you go, that one, which pretty much held since the start of the parabolic run that we had from the COVID dip in March. And it lined up with this area. We broke below that. I said watch for a potential breakdown, deviation back into that zone, and then one further rejection. Now, that is still a possibility. If that takes place, I'm eyeing a strong horizontal. The horizontal comes all the way back from the 2017 levels. You can see key horizontal area that lines up at $179.645 billion for total 3. So this, of course, relates to the altcoins. But I think it's as clear as day that this is in a downtrend. There's no arguing or debating about that. I'm sure you can all agree. Lower high, lower high. If this confirms now and starts to come down, we can confirm that as the next lower high. And that would mean that you're looking for a swing low. So a breakdown below this level at 287. But if this level gets reclaimed, you can also make the case for a new range. And I've told you guys before, when you start to create a bottom within the market, you can expect that you move from a strong downtrend into a sideways range, and that range should hold for a number of months to create an accumulation zone. Now, is it possible that this could be the accumulation zone that we will stick in for total 3 over the next couple of months? Of course, that's possible. So what you want to watch to see with regards to your altcoins that are probably that are formed within this total 3 market cap is this could potentially be a deviation. You want to see a clear break back into the range over here, hold that range low, which is the orange line. That level's coming in at 342.6 billion. That would be your signal to go long. If you want to be extra patient, wait for a break of that trend line, the secondary trend line, and then you can target over here, mid-range, and then range high. So that's what I'm watching over there. Now I'm going to show you how you can use that with Bitcoin as a trigger. So because Bitcoin, you know the flow of money, right? Obviously within crypto, it's always Bitcoin moves first, Ethereum moves second, or with Bitcoin, and then it becomes mid caps and low caps. So to take the safe play trade, you can wait for Bitcoin and Ethereum to do its thing, to reclaim its ranges, to start to target towards mid-range or range high. And then once it's done that, whilst total 3 breaks above these levels, that could give you an opportunity to go long. So look at any one of your favorite altcoins, mark out the ranges in exactly the same way, and wait for them to recapture the mid-range. And I just want to show you one very, very quickly, just because I think this is the easiest one to look at, and that is, okay, I hope I don't lose this. I'll go back. That is, in the portfolio list, is Arweave is a nice one to look at over here. You can see the very, very clear range, right? It looks almost exactly the same. So very quickly, you have the range low, deviation. That's part of total 3. It's the same thing. Break back into this range, and there you have your opportunity to go long. Stops underneath this level. Probably that's quite far. You'll have to manage the risk better on a low time frame, but you get the picture on a swing trade. You then target towards mid-range and then range high. So very, very nice and easy trade. That is the way that you do it. That's the way that you're going to be able to make hopefully quite a lot of money if this relief rally does pan out. On the other side, obviously, if we break below, if this confirms as a lower high and a new local top, then I'll be targeting all the way down. And percentage-wise, that's a big, big move. At least the first move down to the lows, you're looking at about 14%. And then after that, that could mean that altcoins could potentially go down as 46%. So be very, very careful. Understand the risks involved that you are trying to play the long side within a bear market relief rally, because we can only prove that it's not a relief rally once we start to make higher highs and higher lows in a trend fashion, right? So at least 3 times or more. And if you look over here at Pendulum Flow, I thought this is something else interesting to show you guys. He says that, does anyone else see an issue over here? There's very weak market internals. In bull markets, new money is flowing into the system and getting locked into protocols. Instead, we are now seeing the opposite. This is another reason why I am trying to treat this as a relief rally. And I'm not going to, you know what I mean? I'm not going to blindly buy everything and put my money onto a nano ledger and lock it away in a safe for the next 5 years, because I'm not convinced yet. And if you look over here, this is at the bottom over here, ETH is going up. ETH is the orange line. So this is January. If you look at this bar over here, this is January. Massive, massive move up into January. But pretty much since July of 2022, ETH has steadily been climbing up. But then the total value locked has been going down within all those protocols. So they basically removing all of those funds. And that is not what you want to see. You want to see those funds getting locked up in protocols because they believe that the long term is ready to switch. And then another person over here is Benjamin Cowan. He says the altcoin market in a nutshell. This one over here is the crypto total market cap excluding BTC. So it's total 3 plus Ethereum, which pretty much gives you total 2. Here we go. Let's have a look at the chart. So pretty much in a descending triangle, same story, exactly the same story over here. You have, if you take a look, lower high, looks like a rejection to me off of another lower high. If it does come back down to the bottom of the triangle from the current level over here, you're looking at another 17% move, which is similar to what I just showed you. To sweep the lows on total 3, you're going down 14%. So 14 to 16% is a possibility. And then I would probably take that trade, to be honest with you. Once you get down to these levels, it's just a very, very easy invalidation. Again, you have the opportunity on whichever alt you're looking at. There you go. Perfect. Go long, sweep of the lows. And then here you go back to mid-range and then up to potentially range high. So again, I'll quickly show you. Let's just grab this. Let's put that range in. Where is my, here we go. Okay, so range. And you're welcome to draw this in yourself. There you go. You can see it. Range high, range low, mid-range comes over here. So you can see the way that price has reacted. Look at those wicks that we've just had. I'll zoom into this now, but that's mid-range. Let's confirm it with our fib. So take the fib from the top to the bottom. And then let me just put on the 0.5. There we go. 0.5. Look at that, guys. There's the 0.5. It lines up exactly with that zone, the top of this box that I've drawn. So at the moment, price is rejecting. This is the same thing on Bitcoin. Price is rejecting from the mid-range, and therefore you should consider the possibility that it could potentially still be a major bull trap. So you could also play this the other way if you are looking to go short. And I know a lot of people might be out there thinking, oh, okay, what a genius. So it's long or short, it's up or down. Well, this is where trading comes into play. Nobody really knows, especially when you get into these critical levels within price. Nobody really knows exactly which way it's going to go. So you have to play the probabilities. The probability is that the trend will continue. And therefore, if you get another spike up into this zone, you have a short opportunity. If you reclaim back above the mid-range over there, then of course you want to go long. Otherwise, you're shorting back down to the bottom of the range. I hope that is clear. Please let me know in the comments. Tell me in the comments, what do you think? Spam the comments. Let me know. Does that make sense to you? I think it's pretty simple. It should be self-explanatory. You're looking for a pushback into this zone. Failure to reclaim and reject off that level means you're going to probably sweep the lows. Once you sweep the lows, you immediately flip back long, mid-range, and then range high. I hope that helps. I think that I've made that pretty crystal clear over there. Okay, moving on. One of the trend trading tools that I have used in the past, been a couple of years since I last used it, but I thought, well, let's pull something out of the woodworks over here. And we have the Ichimoku cloud. Now, the Ichimoku cloud, you're essentially looking for a bullish cross, which currently is taking place. As you can see over here, the green crossing above the red, that is your Ichimoku cross. But I have a couple of levels of interest over here, which I wanted to show you. First, also, let's focus on the bottom. The bottom over here shows you your ADX and DI. So the ADX green is essentially showing that the bulls are taking control, cross back above the red over there. And the blue is the moving average for that. So that is trending upwards, showing that the bulls are continuing with their strength, showing that there is momentum, actual real momentum behind this move. Now, if I zoom into the Ichimoku cloud, first, actually, before I zoom in, take a look at the range. So you can see the main range that we're within. There we go, range high, range low. And then more or less over here is going to be the mid-range at about 18,720. But when a market really starts to get trending, pullbacks typically sweep the 0.382 fib level, which is why I've highlighted that. That is the only fib level that I've put into this area. Now, the other area of interest that lines up with that 0.382, it's coming in at 19,292. This is why I say that you probably want to lay your bids between 19,000 and 19,500 because it all lines up within that area. So if you do see a sweep, you would expect that it will probably bounce from this level. And that is because you do have over here within the Ichimoku cloud, you do have the different moving averages, the red and the blue one. They are coming in within that zone, and that's going to act as an area of support and continue to trend up. And then you do also have the cross, which has taken place over here and is also trending up. So that is the main area of interest that I'm looking at. That is where I believe that you should start to place your bids if you do want to get into the market. But a lot of people probably know this, and a lot of people are going to do that, which is why those orders could potentially be front run, and you might only see a sweep of 20,000, a reclaim of the range high, and then back up. And I want to be clear over here. That is if this is a trending market, and I'm talking purely about Bitcoin. What I just showed you on the altcoins, because they lag Bitcoin, is if that range high does get reclaimed. So if you do see that happen and altcoins drop down, you reclaim the range high over here. At the same time, you should then start to see this reclaim the mid-range. So once the range high in Bitcoin's reclaimed, altcoins on total 2 and 3 reclaim their mid-range, and that's your trigger to go long. So that's the way that I'm playing it. I'm playing it into altcoins and not into necessarily Bitcoin or Ethereum per se. Okay, moving on. You do still have the quotes moving averages, which are starting to turn over. So basically what this is telling you is that any push into this zone over here now into 21,200 is probably likely going to get faded and start to come down. And then you do have the Fisher distance from EMA also trending down. And again, same levels of confluence around that $19,200 to $19,500 level. Anything that is above here for Bitcoin, for me personally, this range over here, as long as it continues to hold that range, which is the mid-range, coming in at 18,437, that box is an opportunity to go long. As long as you hold within that level, I've drawn the yellow circle. I think that's more or less where your bid should be staggered if you are playing the grid strategy. So the grid strategy, you can be a little bit more spread, because you can put as many grids as you want. I think up to 90 different grids, layer in those orders over there, and then hope that it bounces from that zone. That's if you're trading Bitcoin. So what could move the market? Well, coming up on Wednesday, the 1st of February, I do recommend that you mark this off in your calendars. It's going to be the FOMC statement for the US. They're obviously going to address the state of the markets. The crypto market is going to be highly dependent on what happens at this meeting, as well as what happens within the stock market going forward. So if it is a major bull trap, expect that you're going to lose these lower levels. Expect that FOMC will have an effect. This is the main chart that I'm working with at the moment, is a daily range chart, range low, mid-range, range high. And I want to mark off over here the 1st of February. I think that you guys should do the same. So let's put that in. Okay, there we go. 1st of February, FOMC meeting. Let's make it red because they always seem to move the markets. All right, 1st of February, FOMC meeting, still viewing this as well, lining up with the ranges. If this is a rejection from the mid-range and we are going to come back down to that 0.382 fib level at 19,200, that also creates a cup and handle, which is a bullish formation pattern. So you got the cup, pull back into the handle over there, and then that's your next high low, and then up from there straight to the next level. So if you get to the next level, the range high that I'm looking at is between 24,244 and up to 24,658. Once you clear that level, then you start to target the order block over here, which is coming in at 30,000. This was the main order block level that it was consolidation, and then it led to the major breakdown. So that would be the revisiting zone for a major relief rally. And then we take it from there. But I think we have enough to work with for now. All that you need to focus on for now is this range. You really don't need to complicate it anymore for Bitcoin. This is the range. And let's zoom in and see exactly what price action is doing right now. So you can see the way that the daily candles have failed to close back above that range. We have all the wicks that have been left behind. So selling pressure is coming into the zone, and there's lack of acceptance above that level. Simply put, again, I'm saying this on repeat, reclaim that zone and hold above with a closing daily candle over there, and immediately you need to flip long and start to target up to that 24.5 zone. Okay. Let's quickly have a look at this at Alpha BTC. Mark Cullen, he says over here that so the pullback has started. I'm looking for lower before any attempt to break back above this week's highs on Bitcoin. For bulls, they want a shallow retracement, anything below 19,300, and Bitcoin starts to move to a bearish bias. And that is 100% true. It is a complicated setup at the moment to try and get an entry into this market. So he's seeing exactly the same thing. You can see he's also marked off. I see there the 0.382. Does he have the exact same price? I can't see his exact price levels. I can see by his volume profile over here on the side, that is also going to be the point of control. Okay, they actually labeled it. Point of control for the last 6 months lines up with that 0.382. So that zone is super, super important. That price bounces off of that level. And then you're either going to have a bearish rejection and continue back down after that bounce, or you're going to reclaim above the 618, which he labeled here as the golden pocket rejection and the swing failure pattern. So this is where all those daily lower highs have been printed. If you reclaim above that level, pretty much you should be viewing the same thing, which is back to the range high. See, he's marked it off as 1 on his fib level, which is coming in at 25,500. So that's what I'm watching. Still have the orders on the grid strategy, which have been set over here on Bitget. If you don't already have an account with Bitget and you want to use the grid strategies, check it out there. I do think that ByBit also often offer grid strategies. They're new to the party on that one. Okay, 4-hour chart. You can see that the stochastic RSIs have been consolidating around these bottom levels, and they keep trying to cross back up. So they've remained at those low levels for quite some time, meaning that momentum could quite easily jump back into the market. I want to show you the low time frames with the trade setup that I had yesterday. If you do look over here, I had both the long and the short, and basically it was all based around this massive wick over here that we had. I'm going to quickly delete that. You can see where it is now. So what happened with this trade was, obviously we were holding above this zone, the blue box. The blue box I have in at 21,000. So between 21,056 and up to 21,115. You can see the way that price on an hourly chart has interacted within these levels. You got all the different wicks, right? So wick, tried to reclaim over there, failed, broke down, eventually reclaimed over here, which is why I was going long, because it was holding. We're creating a supporting trend line with higher lows, holding into that level, looked like an ascending triangle with a potential breakout. So I took the long off of the supporting trend line over here. I was in profit. I brought the stop loss into break even when we had this candle break above here, because I knew now we need to hold above, close this candle above for the long to trigger all the way back up. As you can see, that didn't happen. I stopped out at break even, so no loss. Well, actually a little bit of a profit, because I entered one of my trades on this trend line over here. So I think I secured about 4% profit on this trade, and the long was closed. So I'm going to delete that now, because that trade is over. Now we're within this trade over here. Okay, then we went from there. Obviously, this was grabbed. It almost stopped me out. Very, very close. You can see that wick almost stopped the trade out. The stop loss has been placed at 21,713. At the moment, I banked the profits. So when we had this wick down, we approached near mid-range. Our market closed this order, and I'm looking to re-enter into the short. So currently, I'm not in this trade. But if you are in this trade, I would say that you may as well just continue to hold the short trade. What I'm looking at is, again, this as the main zone that I'm watching. If you see price come back into the zone, I think that there could be a very likely rejection. It might play around within this level a bit, but ultimately looking for a rejection back down and then a sweep down to 19,275. So that's what I'm watching on Bitcoin in the very, very short time frame. And then that would, of course, leave you with that whole 𝗏𝗏 pattern. You can see that's what we have developing over there, and it's the same thing that we had on the higher time frame. This is just a much longer consolidation, so big 𝗏𝗏 pattern to the upside over there. Okay, that is the 1 hour chart for you guys, and I think the last thing that I wanted to focus on before we close off over here is the the spot versus the futures, you can see that the spot sold off heavily into that move, but the leverage continued, which is the white line over here, continued to hold strong. The leverage longs are still there. Let's actually take a look at the GMX. Let's quickly look at GMX long to shorts. Okay, here we go. So you got 36 million that are short versus 132 million that are long, which is still a massive, massive long to short ratio. So that's part of the reason as well. I'd still potentially be looking for further downside. I do think that these longs will get squeezed at least once. They're not going to get a free ride straight to 30K. Very, very unlikely. I think they're going to get squeezed first. That's it from me, guys. Wait, one more thing. There is one more thing. I wanted to very quickly touch on this. Let's look at, okay, aggregate spot. And then I want to change this one as well. Okay, so this will be a lesson for you as well. You can do this. If you delete that, you go to indicators, you go to CVD. And I am on coinalyze.net. Great site. I use it a lot. Okay, as you can see, you got exactly the same chart over here now. So this is aggregate spot, but it includes all the different exchanges. I don't know if you guys have seen, there's been a lot of FUD around Binance, whether it's FUD or truth, I don't know, but they're basically saying that BUSD has been the primary driver of this entire move up. So I kind of wanted to like debunk that FUD and see if it's true or not. So what you can do is you can mark off all of the different exchanges. You only leave Binance. That gives you the picture of just Binance. And then you come to this one over here, and then you leave all the other exchanges, and then you only put on Binance. And as you can see over there, there isn't much difference, right? It looks almost the same. So what they were essentially trying to paint a picture of is that BUSD, which is going to be the top line now, was rocketing to the upside, whilst all other spot exchanges were selling off to the downside, meaning that the only spot exchange or the only spot stable coin was BUSD that was driving up the entire market, basically insinuating that maybe CZ has something to do with that. But as you can see, if you use Coinalyze's data and you try and verify that, the pattern looks literally exactly the same. So probably not true. All right. That's it from me, guys. Again, please make sure that you join the Rolex competition. Time is running out. I think we have just over a week left. And then in the month of February, we will be giving it away. You do have to join the Discord anyway to participate in that. As you can see, must take one trade by the end of February, and then you'll be selected to win potentially 2 Rolexes. You must also subscribe to the Crypto Banter channel. Subscribe. Also hit the bell notification and like this video. Comment below what you think of the show. And then also you must be joined into Discord is the last criteria. So that's what you need to do. All right, guys. That is it from me. Thank you so much for watching. Have an absolutely fantastic day. I will see everybody on, what's it, Friday tomorrow. Tomorrow's video. Yes, I do have some big news that's coming up soon, but I'll save it. I'll save it for another day. Have a great day. Cheers for now.